Welcome to the Continuing Education module, Creating the Business Case for Wellness, Making the Best Case You Can with the Best Data. The agenda for this module includes selecting your business case strategy, what makes a strong economic argument, key premises, elements of a persuasive business case, ideal internal data, and a summary of main points. The business case options we're going to look at include using only external data to make your case for wellness. Option number 2 is use only internal data to make that case. And option number 3 is where you use both the internal and external data to make your case for wellness. Option number 1 we'll look at is using only external data. And a simple approach is to emphasize the problem of increasing health-related costs, and that includes health benefit costs, sick leave absenteeism-related costs, worker compensation cost, disability insurance, short-term and long-term, and presenteeism-related expenses. You then cite one or more studies. We'll see what the next slide contains in terms of suggestions for which studies that reflect on the economics of wellness that you might choose, and then propose that an employee wellness program will help fix the problem of rising healthcare costs and health-related costs. Now, the reference studies that you might consider include a meta-analysis, and that's the Backer article that was done by 3 Harvard researchers. We'll look at that one in more depth in a moment. You have the meta-evaluations that I have done periodically. The last one, completed one was in 2012, and I'm working on another one, which will be for 2017. You also have several review articles that can be used to look at multiple studies and assess some of the economic return issues with them. And then you have individual studies, and there's more than 60 of them, that you can use if they're related to your industry or they're related to the design of the program, the wellness program that you're considering for your organization and your population. So these are the options that you have related to reference studies about the economics and the business case for wellness. Now let's look at some of the reference study details. These are all, by the way, specifically identified in the resource that you can download with this particular module, CE module. So all of these studies are cited and identified in the resource that comes along with this particular module. The meta-analysis we were talking about is a more sophisticated look at multiple studies. And there are 3 researchers from Harvard, Ziru Song, Catherine Backer, and David Cutler, that published an article in Health Affairs in 2010 that took 22 peer-reviewed studies on the health plan cost effects of wellness programs, and 22 studies that also looked at separately the sick leave absenteeism effects of worksite wellness programs. That meta-analysis then took some sophisticated techniques for putting all of those studies into the same study pool and then examining their overall effects on the economic issues for employers. So their meta-analysis is one of the best single sources we oftentimes can reference about the economic return associated with wellness programs. And the article, by the way, that you will be able to download in this particular module does include a discussion of strengths and weaknesses of this literature and how you basically should position it and use it. Also in that resource is a meta-evaluation that I did in 2012 for the American Journal of Health Promotion, and it identifies a methodology used to look at the quality of research results, peer review research results around economic variables in wellness. There also are several review articles that are identified in the Getzel, Serksner, Aldana, and Rydell, are the ones that have done some of the better review articles on the literature overall. And then you have individual studies that are identified, and the numbers of the various authors that have written different peer review studies on the economic return of wellness programs are identified in that listing. So the idea would be the individual studies may be your best choice if it lines up with your industry and or the methodology you have chosen to implement around wellness. So these are the primary reference study details. Again, the details of each of these are identified in the resource, the handout that comes with this particular CE module. Now, the overall issue we're looking at is worker health-related costs, and this is an estimate using several major studies that have been done and reported, one by the federal government, the Bureau of Labor Statistics Employment Cost of Compensation Index, and then a more landmark study in presenteeism losses that was done for Dow Chemical. And those studies, when combined, give you this kind of data on the work-related or worker health-related costs. So we're looking at approximately $13,000 of health plan costs, another $2,200 of sick leave, another approximately $800, almost $900 of workers' comp cost, and then $1,400 of disability, short-term and long-term disability cost associated with the health of an individual employee each year. So the total of all of this, plus the $19,500 of presenteeism losses due to employees coming to work sick and then losing productivity from those underlying health conditions and diseases and symptoms. And the overall total here is about $37,000 per employee per year as a health-related cost of what most American employers are experiencing. We then can contrast that with a $300 per employee per year wellness budget, which is actually less than 1% of what the current costs are estimated across the U.S. workforce. So this kind of context is what we're looking for in terms of getting business case information that allows us to either use external data from the population, the employer population at large, or coming up with your own numbers for your own organization and using that internal data to build your case, the business case for worksite wellness. The second option for your strategy around business case is to use your internal data only. And you can retrieve historical data for your health plan cost and health benefit cost, sick leave, absenteeism, workers' comp, and disability for the previous 5 years. Generally, most employers don't have hard data on presenteeism, but that's also a place where you could potentially use methodology that's been conducted elsewhere and then apply it to your population. You can also calculate the average rate of annual increase for each type of health cost. So that would be looking forward and or looking back and seeing what that average rate of annual increase is and then projecting that forward. You can examine the health-related costs as a percentage of after-tax profits or net revenue if you're in the public sector or the nonprofit sector. So that idea is you're looking at the health-related, worker health-related costs, and you're comparing it to the financial viability, the financial performance of the organization. In addition, in that internal data only, with the second option, you can conduct a separate analysis of presenteeism. So you can either take the Collins article on Dow Chemical and use that as a percentage of the health-related cost or the health benefit costs, and use that as a leverage point and as a reference point for discussing the issues of presenteeism cost and presenteeism losses. You can then, using the 5-year averages in the past, to project the next 5 years. So that's a fairly typical thing that people can do, is to look and see what the 5-year average increase per year is, the growth rate, and then apply that growth rate out for the next 5-year period. That can then be compared with your experiences of either after-tax profitability or effects on net revenue from the increase in those costs. And then you can propose a wellness program to reduce those costs even by something as small as 10% and examine the significance to future costs and profitability. That's the way in which you would strategically position your wellness program in terms of a business case presentation. Now, the data acquisition issues are as follows. For each of these 5 different types of health-related costs, we have some acquisition strategies identified. So those are the things that you would in fact look at. TPA, by the way, is third-party administrator. NPV is net present value, and that's a standardized financial process or method for determining what the net economic impact of something like a wellness program would be on the organization. Workers' comp, WC, FM is financial management, DI is disability insurance, and again, financial management staff. Those are what the acronyms are within the graph or the acquisition strategies. So each of these areas has some different strategies attached to it. Also, depending on the size of the organization, the issue of how much of those types of data are experience-driven or are self-insured by the employer will in fact affect the economic argument and the business case presentation. Now, option number 3 is where we use both internal and external data to make the business case for wellness. And we can use current and future health cost projections. We can look at some of the implications of those costs for profitability and our ability to secure increased levels of profitability. The prevalence of health risk can also be considered because we know from a lot of the data that's been collected over the years and has built out the epidemiologic and economic and econometric databases for these areas. We know what those prevalence of health risk are and the economic premium, what's called the risk premium attached to those specific risk areas. The health risk increased costs. We can then also look at the situation if our workforce is aging. That situation will likely deteriorate further without intervention. That's a lot of the work of Dee Eddington and the Health Management Research Center at University of Michigan. Wellness can provide the organizing framework for addressing those underlying health risk issues. And there's plenty of evidence for the economic return for wellness programs. So because of the absence of federal and public funding of research for wellness, we end up with not having as extensive or as clear a base of evidence around the economics of wellness. But we have an enormous number of articles where people have documented the positive economic effects of wellness programs. Now, wellness programs, in order to be economically effective, have to be well designed and well executed. So that means they have to choose the right targets and they have to choose the right interventions and they have to then monitor the right metrics in terms of shaping and identifying and refining the program over time. Now, option number 3, using internal and external data. Here are the various forms of issues and their general utility to this option 3 business case strategy is listed in the right-hand column. Now, the PEPY stands for per employee per year, the annual growth rates. We also have all health benefit lines and types of coverage. And then FASB is Financial Accounting Standards Board's 106. That's a ruling that basically requires that all publicly traded companies need to identify the future health benefit liabilities associated with post-employment retirement benefits. Workers' compensation, again, the PEPY is per employee per year. That's a great way for us to look at some of the implications of the data around the business case. And then we have the issues around how that workers' comp with salary continuation and medical reimbursement and the ratio between those. So that, again, salary and or wage continuation, that's about 2/3 of workers' compensation costs for injury and illness that occurs with a worker. And also that second part is the medical reimbursement provisions. So that's the portion of workers' comp that goes to actually reimburse for health care that is delivered to individuals where there's been a problem that's occurred related to work responsibilities, and it's either an illness or an injury. Under the disability insurance type of data, again, per employee per year kinds of cost analysis. That's our unit of analysis. FASB 112 is the requirement for the recording of financial assets that have a liability attached to future year responsibilities under disability. So that's to help accountants essentially value companies and value and provide a standardized way of looking at some of the liabilities and the assets that a particular organization has. Sick leave absenteeism, again, per employee per year cost related experience. And under presenteeism, that same PEPY kind of analysis. In general, the PEPY per employee per year is an excellent way of us looking at the costs and dealing with the cost in terms of a business case approach. Now, the results-driven wellness framework allows us to look at needs and targets. We then have a planning process that helps us come up with a design, which usually involves a set of targets we're going after. They're behavioral targets. And we also then have interventions that are linked to those targets. And then what we do with intermediate results is we're looking for some indication of the sequential changes that happen from behavior change to observations of health status that come out of biometric testing, and then self-reported kinds of productivity assessments. And then the ultimate results get evaluated around the ROI or economic benefits, and then other benefits are the VOI, the value on investment. So these are some of the areas that we generally look at. And then there is a feedback loop that goes into that framework that says once we see what we've accomplished, we then want to go back and maybe tighten up our needs and targets, or shift our metrics, or set our goals a little higher, and then go through a planning process that's abbreviated that helps us make refinements in the interventions and refinements in how we implement the program. Then we're looking at intermediate results to be logically, sequentially occurring, and then we expect to see those ultimate results actually coming into a change situation also. So this results-driven wellness framework is really an excellent framework for presenting the logic of what we're doing with a wellness program. This is what allows our senior management to feel comfortable saying, oh, I like what you're doing, it's logical, I can follow it, I can see that there's going to be a way for us to make refinements and improvements over time. The best internal company data is going to include things like per employee health benefit costs, usually plus or minus 3 years. So we look back 3 years and then we want to think about our 3-year period coming up. We also then want to have per employee sick leave cost per year, and that's that PEPY kind of concept applied for 3 years post, 3 years past, and 3 years forward. The per employee workers' comp costs, again, 3 years back and 3 years forward. And we're establishing, by the way, trend lines with this data so that we can tell what in fact is happening. And our trend lines are either going to get better, they're going to get worse, or they're going to stay the same. The per employee disability insurance costs, again, 3 years back, 3 years forward. Per employee presenteeism related cost, 3 years back and 3 years forward. And then comparing this composite of costs to our after-tax profitability for that 3-year period and looking 3 years ahead. So if you're thinking about the best kind of internal company data to establish a rationale and a business case for wellness, these are the items. And if we are in the nonprofit sector or the governmental sector, we then want to look at what is the net revenue. How do these costs relate to how much money we have left over at the end of the year that we can use to help improve the functionality or the planning or the investment in our infrastructure or our organization. So that's the equivalent in the nonprofit governmental sector to after-tax profitability, which is a general measure that we look at in the profit-making sectors of our economy. Now, again, working on this strategy number 3, using internal and external data, a more sophisticated approach might show a pie chart of those per employee per year costs, either the ones that I showed you earlier, the 2015 dollars, or the idea that you put your own pie chart together of those costs for your organization, using some generally reasonable methodologies to come up with those costs. You also can show the total cost for the next 3 years with explicit growth rate assumptions for each. You can show the after-tax profitability or net revenue amounts for each year. You can identify the wellness per employee per year estimates of what the program's PEPY costs would be. You can also use reference studies and multiply times the program cost. So you can use either the Banker study or you can pick out one of the other studies that has projected the return on investment for wellness programs. You can deduct from appropriate PEPY costs, and that allows you to really use those external resources to come up with an estimate of what the yield would be and then compare that to the actual cost of your program. You can then show a comparison of the PEPY pie charts with and without wellness. So you can show them in relation to each other and how much they grow when you don't have the wellness affecting those costs over time. So this is a more sophisticated approach to the business case that allows you to take these 5 health-related, worker health-related economic variables and then to project what a wellness program might do with those over time. Now, the net present value is a methodology that is used to compute the net economic cost of a wellness program or any kind of activity on the organization. And you need to estimate the savings and costs by time period. You usually want to use a 3 to 5 year time period. You want and need the discount rate and hurdle rate. And that discount rate is how, if we want to deal with constant dollars, we need to then make an assumption about what that rate of growth in our economic cost or the consumer price index would be that would remove some of the purchasing power of our dollars over time. And the hurdle rate assumptions have to do with what is the minimum economic return that the organization wants from its capital. So if you have X amount of capital, what's the percentage return on that you expect to get in order to invest or in order to use it in a particular way? It's also important for multiple year projections. So our net present value is used to estimate forward what will be the ultimate net economic impact of the wellness program. And it's usually reported in dollars. And that's the formula for it. And that formula is the net present value, NPV, is equal to the sum, that's the sum issues, of the net cash flow, i.e. the income, C, minus expenses, F, divided by 1, plus the discount rate, and that's where our hurdle rate also comes in, and for the time period involved, the T. So this is the technical formula used by accountants to determine what the net present value is for something like a wellness program. Anything that you can estimate costs and savings for can be put into this particular methodology to look at what its net economic effect will be on the organization. So it is used, I've used it with a number of clients to help them get comfortable with the idea that they can in fact look at a wellness program and make projections that are just like if they were offering a new product line or building a new plant or putting in a new parking lot. So all kinds of things can be considered around this net present value methodology. Now, what makes a strong economic argument? Basically, a rational perspective, and that's why we gave you the framework to put this into, based on credible premises. So you make premises, you make kind of projections, or you make assumptions about what you're going to be doing. It usually needs to have a persuasive business case. So there's got to be a rationale as to why a business person would want to invest in wellness. And that's what we're doing when we produce a business case. We usually want to use valid data. So we have to know, where did I get the data? Where did it come from? Are we sure that it is valid? Has it been given any kind of defensible rationale? Is it explained? Is it understood by the people we're going to be using it with? Usually a strong economic argument is based on reasonable assumptions. We all have to make assumptions about the future. So when we think about a wellness program and we think about how that affects the future of an organization, we need to be able to make those assumptions in a reasonable manner. And it's basically putting those assumptions into explicit form and then letting your critics and or supporters look at those and then come to some agreement and consensus that they are reasonable, a reasonable base of assumptions about how this will affect your organization. And fairly high probability of success. So we want to know that the way we're going to go about this will in fact lead to success. And in wellness, success is behavior change. So if we can help people make the behavior changes that are associated with various health risks and various issues of well-being, then we can achieve a high probability of success. And generally that strong economic argument also has the ability to track and measure the various outcomes and the various metrics that we will be using around wellness. So these, in summary, are, I think, the major issues that lead to a strong economic argument for wellness programming in worksite settings. Now, the rational perspective we want to bring along is we want to be addressing a legitimate problem, and that means it's a pain point. You know, if health costs are a real pain point to your senior management, then that means we're addressing that pain point, and that is a legitimate problem we want to try to solve. There needs to be logical reasoning behind it in terms of assessing what the problem is, what I'm going to do about it, how I'm going to measure how much change has taken place. We also want to have it aligned with business purposes. So it needs to fit with those both economic and non-economic rationales around business. And we also need to be not overly self-serving. We can't put this forward and say, give me a whole bunch of money and I can hire a whole bunch of people, and have that really be more self-serving than it is serving of the needs and problems of the organization. It does need to be reasonable. There needs to be a reasonable test to it. Most people can look at something and say that's reasonable or that's unreasonable. Also, understated emotions. We don't want to get so much. We have to have some energy going into this because other people, need that energy for them to see some vision. But at the same time, we don't want our emotions and our feelings about this to totally overwhelm the rational side of what we're doing. So that's that understated emotions. This is kind of, this is a technical way of fixing a major problem for our organization. And it needs to be relevant to the survival, the long-term survivability and sustainability of the organizations that we're working with. So it needs to be relevant to our being able to continue to function, be able to continue to survive and be sustained. Now, usually those business cases need to be based on key premises, that you have an accurate assessment and understanding of the relationships of key parties. Your currency is clear in terms of what you're looking at. If this is a global company, are you going to be using dollars across all of your analysis? So make sure your currency is clear. It's historically defensible. So you want to be able to say, here's the pattern we've had in the past. We think it's going to be very close to this, or we think it's not going to be for the following reasons. Others have done it, so we generally want to say this is not new. Others have done this before. They've been successful at it. We want to build on those successes. You want to have a sound cause and effect relationship running through it. That helps my logic. If I can see a problem and then say, here's the activity I'm going to use to solve the problem, and here's how I'm going to know that it is solved or not. So that's that sound cause and effect relationships. You generally want to understand also that we aren't going to do this overnight. So there is going to be some phasing of things over time. And we also want to help people understand a little bit about this by giving some examples. So we might want to talk about some of the things like testing, or like being able to talk to people about habit development and what habit change requires. So we want to use examples where appropriate in illustrating what we're doing. Another one of the key premises is that our sources that we're going to look at are legitimate. So we're not going to use things that are on the edge of science or not scientific at all. We want to use things that have as much science base as possible and as much legitimacy in the eyes of business leaders. And we also want to have unknowns that are acknowledged. So where we are not sure about things, we need to be able to say that. We need to be able to say there is some uncertainty about this particular issue. We're uncertain about the repairs that have been, are being designed for the ACA, for Obamacare. So we want to be able to say we're not quite sure. We think what's going to happen is that costs are going to continue to go up. So we want to be able to identify general kinds of issues, but we also want to acknowledge unknowns where they exist. So these are some of the key premises that we want driving our business case presentation. We also want persuasive business case, and that means the cost of fixing this problem is not prohibitive. It should not look as too large. We want to gain. We want our gain to be larger than the cost. So we want to have what would be called a return on investment greater than 1. So that means that there's some benefit, financial benefit for us doing wellness. We also want to have risk and deal with things in our business case where the risk that we're encountering is manageable. Business operates in environments where they try to minimize risk and maximize certainty. So we want to be able to manage the risk involved in a wellness program. We also know that inaction is not an option. So if we don't do anything around wellness and around helping people stay low risk, we have a great deal of evidence that people's health will deteriorate as a natural part of the aging process. So if we don't do anything, things will get worse. All material issues addressed. So anything important that is material to a business leader or business manager needs to be addressed. And we also need to be able to identify that others have succeeded. Some have failed, and we want to learn from their failures, but we also want to identify that others have in fact succeeded. And we also want to emphasize that in addition to the economic benefits of the business case, we also have collateral advantages. And those have to do with our things like being a good corporate citizen in our community and contributing to things that are valued by our entire community. So there's lots of other ways in which wellness can be a collateral advantage to a business and an organization. Now, we also want to use valid data, and that means the source is appropriate, the units we're using for analysis are appropriate, the timing of the data is appropriate, the projections are appropriate, the measurements are not limited in important ways, so we don't want to have surprises in the data that we use in terms of its limitations. We also want the approach to be emulated elsewhere. So we'd like to be able to say we're using the methodology developed by Hero to estimate what the economic return will be from risk reduction. We want to be able to use and identify sources like Harvard and the meta-analysis. So we want to use approaches that are emulated elsewhere. We also want to identify all limitations when they are present. So we don't want to leave important information out of our business case presentation about the assumptions we're making and what we're attempting to do with a wellness program. Now, we also want to be able to do a business case that's based on reasonable assumptions, and that means how much time is required to actually put the program into being, what's our organizational capability to do wellness in either the feel-good model, the traditional model, or the results-driven model. We also need employee reaction and assumptions about how employees are going to react to the wellness efforts. There also may be some prerequisites that we need to put in place before we introduce various kinds of wellness activities. So maybe we need to make sure that we can handle incentives around reduced premium contribution, for instance, around wellness involvement. There's also the issue of the importance that we're making on cooperation, the cooperation between different kinds of staffing and different responsibilities of staff and managers and supervisors around our wellness program. We also usually want to make some reasonable assumptions about tracking, about what we can do to actually track the performance and the impact of our wellness efforts. And we want to be appropriately conservative in terms of those reasonable assumptions. So where necessary, it is appropriate for us to take our assumptions and actually make them a little more conservative by either reducing them or saying, just to be certain, we're going to take the conservative view on this particular set of assumptions. And we also need to be able to have our assumptions amenable to change. So if there is a concern for some of the assumptions we've made as part of our business case, we want to be able to change those to reflect what people consider to be reasonable in our approach. So these are the things that we want to be related and we want to be able to shape our reasonable assumptions in our business case kind of activity. Now, there also needs to be a high probability of success, and to do that, we need to have an acceptable margin of error. There's always a margin of error in all calculations and all projections. We want to have a feasible approach. What we're proposing is feasible for us to accomplish. We want to usually have at least an idea about what's our fallback plan, our plan B. If A fails, what's plan B look like? We also want others to be successful, and we want this to improve their success. So we want that to be a cooperative venture. We want the circumstances to be aligned so that we can have that high probability of success. We want the cost to benefit balance to be reasonable according to the perceptions of our senior management. And we'd like to be able to say, in terms of probability of success, yes, we've done this before. It's occurred over here, and now we're replicating it over here. So these are the issues that are foremost in securing that high probability of success from a business case presentation for an employee wellness program. And we also need to have measurable outcomes, and those mean that they must be trackable. There oftentimes can be other purposes that the data is coming from. It may be a payroll system, or it may be a claims adjudication system that is identifying some of the issues we're getting at through our wellness efforts. It also means that those outcomes need to be adjustable, meaning if we find that there's better measures or better metrics, then we need to be able to update those and shift our focus to something that is more appropriate. And then usually range oriented. So outcomes should be range oriented, particularly in terms of our goals. We'd like to have a goal of, for instance, reducing maybe obesity in our population by 2 to 6% per year. So we may have to be range oriented in those outcome measures. We also want to include, usually in any analysis, the percent involved. So it isn't just the raw numbers, it's also the percent improvement or percent change over time. We usually want the methodology for measurement to be clear. So we don't want to be using an overly complicated methodology. We want it to be clear to the viewer or to the user or to the individual that's watching what we're doing. We also want refinements to be possible. So we always want to have an attitude that we want to refine this to improve its functionality, its ability to measure or to reflect what is important. And we'd like to have it be dashboard-like. So we need to take some of those outcome measures, actually put them into a dashboard kind of phenomena, if you will. So these are some of the measurable outcome-related criteria that would be helpful to us in being able to structure this so that it actually leads to improved well-being, improved health, and improved economic performance of organizations. Now, the ideal internal data is per employee health benefit cost, 3 years plus, 3 years future, 3 years past, 3 years future, per employee sick leave costs, per employee workers' comp cost, per employee disability insurance costs, per employee presenteeism cost, after-tax profitability, and or net revenue, depending on whether we're in the profit-making or non-profit sectors. So these, again, are the ideal internal data that we'd like to use to get a composite of what that overall worker health-related cost is for our workforce. Summary of key points for this particular module. Your business case strategy can use external data only, internal data only, or both. Strongest economic case uses the organization's actual data in making the argument and presenting the business case. The time period of the planning needs to be at least 3 years. So we need to be looking at multiple year periods of programming in terms of assessing its economic impact on the organization. The logic of your business case needs to be tight. Okay, so the logic has to be tight to the reader, the perceiver, the individual who is listening to your business case. The data to be used needs to be valid and persuasive. All major questions need to be addressed in the proposal that you end up putting together. And you can either do a verbal proposal or you can do usually a written proposal. And you then may provide the highlights of that in a verbal way. Any major unknown factor is identified and planned for follow-up. So we don't want to leave unknown factors floating. The probability of success and a possible return, a positive return, should be high. All assumptions are reasonable and hold up under scrutiny. So we don't want to be putting in any kind of assumptions that are really questionable or unreasonable. Your personal credibility covers the presentation. So a lot of your own personal credibility gets associated with the presentation that you make. The presentation of the proposal should be well-paced and well-planned. Be prepared to follow up on the proposed proposal details. So that's the next step. It's be ready for that next step. So these are a summary of some of the key points, the main points around the issue of business case development and presentation. Now let's look at some key questions for this particular module. First question is, what are the usual characteristics of a credible proposal? I believe it, first of all, needs to be easy to follow, laid out logically, well organized, reasonable detail level, reasonable plans identified, identifying also major challenges and some ways of dealing with those, having some backup plans identified, and providing some measurement and accountability kinds of issues related to that proposal. So those are the characteristics that I believe have to do with a credible proposal for something like a wellness program. Second question is, what exactly is strong evidence? And strong evidence essentially follows what might be called a hierarchy of evidence. And the hierarchy starts at the bottom with getting somebody who's got some experience giving their opinion. Then the next level is you take several of those people with experience, you put them together as an expert panel, and they then basically are saying something about whatever it is. Next level up is when you actually go out and survey formally what people are doing. Rather than taking someone's opinion, you in fact are collecting information from multiple sources and putting that survey together. The next level up is when you take an individual study and you do more in-depth work about what actually has happened. What have people done? What is the outcome of what they've done? Once you've done a single study, the next level up in terms of credible or strong evidence is taking multiple studies and putting them together. That's what what's called the meta-evaluation in the handout that comes with this CE module talks about and describes. So that's multiple studies, and then you're summarizing the results of those multiple studies. And then the highest level is what we call the randomized controlled trials or observational trials, where we in fact are really following closely what it is that we're trying to accomplish and address, and the problem we're trying to address, and then how and what effect we have over time. So the extent to which your evidence is coming from each of these levels in the hierarchy, the higher up you are in terms of the overall hierarchy, the more powerful that evidence is. The third question that we're going to deal with is, what is tight logic? I use the phrase tight logic. And basically tight logic goes back to operations research techniques, systematic analysis techniques that have to do with what's the way in which we're approaching the task of solving a particular problem. So if we've defined our problem tightly, we've identified the concerns and the issues that are going to shape our solution, okay? And we've identified any constraints that we're experiencing or have that we need to address. And we then are looking at what's the solution we're going to apply. And then how are we going to find out, did it fix the problem? So tight logic really has to do with how closely we follow that kind of general orientation to looking at something and determining its nature and the problem we want to solve and what it's going to take to solve that, and then how we're going to measure or determine how much of the problem we were actually able to affect. So that's a little bit of an insight of what that tight logic is. Not a lot of extraneous information. In fact, no extraneous information. We stay focused and we follow in a tight logic kind of way from our problem all the way down to our solution. And we don't deviate to do things that are not relevant to the problem that we're trying to focus on. Now that you've completed this module, go ahead and take the quiz.